What's up, guys? I saved this chart. It's on Paint right now, but I knew I was going to do a video this weekend, and I wanted to make sure that you guys saw the prior clothesline. So I wanted to have that there because I'm going to go back and show you, like the regular charts like we typically do. But if I'm showing you DYAX, obviously the prior close is on what Thursday's close was. So my point being is, I want you to see that, I talk about this a lot, but we're looking for a weak open on big charts like this. And again, DYX, if you look at the big, the daily chart, obviously it had a huge day. But just because it's up does not mean it's a short. And I talk about that all the time. And for me, going back in the last 2, 3, 4 years, some of my biggest losses have come from thinking, hey, this thing was up 50% yesterday, it's got to pull back. But the reality is it doesn't, and stocks do go up. So typically when we have a trade like this, especially in a hot market, I look for that weak open and for it to start to consolidate and then start to head towards red to green. And whether or not I start in right away kind of depends on the activity, and depending on how much I want to risk depends on the size that I'm going to end up taking. So, for example, I did start in a little early on this, and I got in about this level here, right around 25, 05, 25.10. And I just bought the washout, and my thought process was if 25 washes, reclaims, and then starts to hold that trend, then I think we're going to have a decent runner. And the idea was potentially towards 26, 27, which is exactly what ended up happening. It was pretty much to a T, and I like when that works, but I hate when I sell at this level being excited and then the easiest 80 cents per share comes next. But I think the biggest thing to really understand here is my whole thought process was basically based off 2450s. And I'm putting this line here because you can see this is 2460s. But as I tell everybody and as I told everybody in the room, my thought process was based off of 2450s. So I started in, I wanted to add to a winner. And so it started to, ramp back up, and I thought, all right, maybe this is the time. And it wasn't. Then it started to pull back, and so I put in a base here at 2470s range, and then it wanted to retest it and went down to like the 65 to 68 range, and that kind of retested the prior lows, which you can see pretty much right here. If I draw this line, you can see that it had a 70 low, and then 68, 65s, and then 70 base, and then it snapped again. So it kept everybody on their toes. But then it started to have a nice little grind up, which you can see here. And the next piece that I wanted to see to confirm the thought process, confirm the idea, and confirm the trade was for the 25 to hold. And not necessarily to break through the 25, which it did, and I'll show you the 25 mark is right here. Not that it just ripped through 25 and it held, but what I want to see is I want to see it retest, hold, and it started to continue to go on. So that was great. Then it starts to rebound, held that 25 level, and if you look back at the chat commentary, I had mentioned a few times that they were absorbing there. And typically what I mean by absorbing is, you just push through 25 and now it looks really actually heavy, but yet there's 100 shares at 25 and it just kind of is absorbing whatever size comes in. A couple thousand shares, 5,000 shares, 10,000, 5,000, 2,000, whatever. And meanwhile, it's only a 100 share bid and it continues to soak up whatever's coming in. So with seeing that, it gave me a little bit more confidence that my trade was right. And as it started to hold this trend, I did add a little bit based on that 2450s. And as I said in chat, once that happens, then you can risk based on the lower days, which became the 70s. And then as it grinded up, you could move up to the 80s or basically whatever you wanted to do. So as I saw this absorption at 25, I kind of came to the thought process, the assumption, and I think at that point in chat I had said, I'm staying long. This is my assumption, but just make sure that you have a plan. Make sure you have a stop in mind that, if it doesn't hold this area, then it's going to continue to fade off. And yeah, you probably should have, would have, could have taken profits up here, and it would have been a nice trade. So overall, after the time I had added on the dips a little bit when it was trending, I had about a 24.90s average or so. And so I had gone from being up decently to being pretty much flat, but I had a confidence in the trade. And just because I have confidence doesn't mean that it's right. Sometimes I'm wrong, and that just kind of comes down to, being wrong and taking it off and seeing that it starts to peak out at 25 and then fade off and going ahead and taking the loss, not trying to, I'll just see what happens. So once it dropped under 25 a couple times, it was still just kind of hanging around, and then popped right back up, and then that was it. It was straight up from there. And I wanted to have patience, and I had pretty good patience, so it was holding a nice trend. And I made it all the way up towards the 26s. And then I finally took some off into this area. I took some off into this area. And then I took the last little bits off right here. And so I basically made it through one of the peaks, and then it pulled back, and then it put in a new high, and then it pulled back. And I was just happy with the trade, and it did exactly what I was thinking, and I took the rest off. And that was about $1.10 to $1.40 per share or so. That was awesome, but the part that, as I said, always aggravates me is that this was the next easiest, almost buck per share move, and I didn't capture it, which it would have pretty much doubled my profits. So either way, the reason I saved this, like I said, on Paint is just because I wanted you to see, anticipating this prior close, this basically red to green. And some people always ask me, hey, wait, isn't red to green where it opened at? And that would be around this level here or so at 930, which is somewhere in here. And everybody always thinks that it's that level, and so basically right here would be red to green, but that's not the way that I view it. That's not what I think. The way that I trade, the way that I anticipate moves is actually red to green on the day. What was the prior close, and where did it close at? And if it was a penny less than the prior close, then that means it's red. And if it's a penny above the prior close, then that means it's green. So that was that trade. And again, you can see the same thing if I go back to this chart here. But again, it's just the prior close is wrong. So you can see ABCD type pattern where you don't know what this is going to be. Let it ramp back up. Wait for a pullback. Starts to consolidate higher lows. Starts to grind up towards these prior highs. Well, anywhere in here, you can start anticipating partial size and risk to low days, or half size, or whatever you're comfortable with, and risk off these lows right here. So that was a perfect trade, and I was really happy about that. CRMD was the only other one that I really think that you could probably learn a lot of. Actually, two more, THZ and CRMD. CRMD was, this is what I would consider. I'm not looking for a parabolic move anymore. I'm looking for failed follow-through momentum. And the way that I view that is, you've got this big overextended chart, which, sure, we had that nice opportunity for the parabolic move, then the pullback, and then they accumulated it, and it went right back up. Same thing the next day, and now, it's consolidated at this higher level. It's no longer this is a prime shorting opportunity because the chance that everybody's going to be taking profits. So with that said, now I want to just look for the backside of the move, and I'm looking to add on pops on that backside. And there was a negative article that was written on Twitter with somebody that has a decent number of followers, and I'm not saying anything bad about that person. They're a good trader, but when free information is given like that, where, hey, this is my view, I think it's a short and warrants and this and that, and it probably goes to X price, which happens to be, 70% lower or something. The easier the information is to interpret, the more likely people are just kind of short at will and have really no idea what they're doing. So with that said, when the trend actually held, ended up probably squeezing out all those people that just kind of short just because they basically heard it was a good short, and then ended up getting squeezed out, and ended up giving us a great opportunity to get short. So I had short this day. I held some overnight, and my plan was basically to short all pops, and that's exactly what I did. And as it was down here towards the 930, 940 level, I went ahead and took some of the gains as I suggested in chat. And I said that every pop for me is an opportunity. I don't want to be waiting until lows. I don't want to be waiting for it to get to, obvious breakdown. I want to be taking advantage of those pops and use basically a guide off of, as I said in scan, the 1030s. And the reason that I said the 1030s was, here we are from the day before, those prior highs. And you can see that this pop here, 1030s, this pop here, 1030s. So all pops, no matter what happens, I'm thinking if I want to size in with a risk based off those 1030s. And then that way it gives you the confidence to go ahead and let the trade pan out. Because there's nothing worse than, getting into a short position, you're oversized a little bit, and you think, well, hey, you know what? If it pops up, I got to cover because, now I'm down $2,000. I don't know what to do and all this kind of crap. So point being is, if you size in accordingly and let the trade work out how expecting it, anticipate it, then at least you're letting the trade work out and you're not letting the emotions take over, which is a lot of the problem. That it's pretty much the biggest problem people have, is their emotions start to take over when a trade's not working. But if you make a plan and you have that strategy and you size in correctly, then at least you let the trade work and the emotions are not involved. So anyway, I had covered some here. I had added some into the pops, added a little bit more. Covered some into the washout, but I held overnight. Again, short, just small. And I guess two others. I said one other, but THZ, this thing was ridiculous. And I definitely, this day I thought that it was going to do this. And I was a day early. I had started in 24.4 and 25 range. And there was about 2, 3, 4 different times that I was up pretty nicely. And even this last pullback, I thought, all right, it's finally time, because the timing was right. It was at 3:20 p.m. into the close. And I thought, you know what, maybe it's going to finally crack. And it didn't. And it just went up and it squeezed, and it pretty much went up on air towards the close. So that's definitely something that I was not involved in overnight. I don't have that type of buying power. Somebody like LX21, who can short many 100,000 shares because he's got many millions in his account, that's great, but you need a $2.50 minimum per share here. So if you're thinking about it, you've got 500,000 shares short, you need $2.5 million of cash in your account just to cover that. And at the same time, 200,000 shares, which is what I had this day, you need $1 million. And I don't trade with $1 million in my account because I make stupid decisions. So unfortunately, I missed a good payday this day. I only had 50,000 shares short on the way down, but the idea was pretty much, pre-market, into all pops and lower high, and obviously a nice fade off. But there was the skull and crossbones on OTC markets, which is kind of like the kiss of death. Same thing happened to AXMM, and it was just a slow fader. But you could definitely tell that the tide had turned, because if you go back to the day before, every time it started to bounce, it just kind of ripped up on air. And then as soon as it started to go, it ripped up on air. Same thing here. And this next day, Thursday, 100% different. So very, very, very nice opportunity. I ended up covering down here at the 15.5s was the average cover. Started to hold up, had a nice little ramp back up. And then I missed the reshort and ended up closing at the low of days. So really nice trade by Greg, LX21. He called that one straight up on Twitter as well. And so that was that. The only other one, GBSN, that I would like to talk about, and then I'll be done with this video, is what I would call a crowded trade. And there's nothing wrong with crowd, but you just need to kind of understand what it is. And sometimes I even have trouble with it because even Genie and even this one, GBSN, everybody might be short, and that includes some of the best traders that I know, and they're short for a reason, and they're likely to be right. However, it all depends on your time frame and what are you looking to get out of the trade. Sure, some of the best traders in the world are short and they're likely to cover in 2 weeks at $3 or $2.50 or whatever it may be, just like BIOC. But if your timetable is different than theirs, then that trade may not be for you. And that's kind of where the crowded trade mentality comes in, where people are shorting at 3.50 because it's up a lot, or 4, and they think, oh, it can't go that much higher, can it? And then it does. And so then, where they might have a 350, 370, 4 average or something like that, well, they start to get to that emotional break point where it starts to go towards 470s and 5s, and now they're thinking about their account blowing up, and they end up covering because they have a different plan. They didn't scale in correctly. And when everybody's short and the trend is holding, that's not something that I want to be fighting with size unless, number one, I have a game plan of a longer term, I have a solid borrow, or number two, you could be boxed, meaning you might be short in one account and then long to basically offset your risk so that when the momentum does fizzle, when it goes away, you can go ahead and sell the long and then you're net short and the trade ideally pans out. And to kind of show you what that looks like intraday is everybody's thinking it's a short, and you've got that nice little pop out of the open, and we did get short and had a nice little fader and covered, but then it starts to grind back up, comes back, holds the same lows, goes back up, holds a higher low, starts to grind up, and you can see the emotional candles here where you're starting to get market covers, you're starting to get panic where people are like, oh crap, this thing's going back to 5 and I'm going to blow up. And then as the crowd kind of moves out, the overcrowded, the people that were shorting with a different bias, an intraday bias rather than a week out, and are willing to go for a little bit of a ride first, once those people filter out, then you've got that nice big pullback. And the same thing happened the day before where it had the week open and ended up holding trend, ramped up, everybody thinks, all right, it's done. And then it's got that whole next $1.50 more squeeze and basically, cans everybody. So that's what I mean when I say a crowded trade. A lot of people always ask me, what the heck does that mean? And that's what it means. And if everybody's got the same thought process and the stock is continuing to go up, you have to ask yourself, what is your time frame? Is your time frame the same as somebody else who's confident about it, or is your time frame intraday? Because if your time frame is intraday, then you're going to be this guy covering here or this guy covering here because your viewpoint is short term versus somebody else's long term. So I think that about does it, guys. If you have any questions, reach out. I hope everybody has a good holiday weekend, and that about does it.